Morning, Monday, February 17th. Some markets are closed now early. It's President's Day. Some markets are still open. Those that are still open, you would have to assume that it's not very active and not too much is going to happen for the balance of the day because of being a holiday. So, having said that, I do start out with stock market indexes and go to futures. Um, we'll see what's open and what's not open. Now, as you know, the E-mini has been rallying a little bit the last couple of days and it come up really close to making some important new highs and at now price levels that are critically important for bullish follow through. If it starts to make new highs, stays in new high ground and does not reverse and close back down again, we have potential likely bullish breakout on the stock indexes, and it could be quite bullish, keeping in mind that for most part, we have been going into this sideways trading range from the early part of December. That's December, January, and now halfway into February. 2.5, 3 months, somewhere in that neighborhood. And that's not too small, and that's not gigantic either. It's a pretty good sized time frame. And that implies that the market is gaining some energy, if you will, pent up energy. And once you get an upside or downside breakout, you're going to get a fairly substantial move. At the moment, we're close to the bullish, but it hasn't happened yet. We could see any kind of a bearish engulfing. We could see reversals. And frankly, I'm still holding my ground. I do think this market is in the process of topping out. Not a big time top, not a bear market, not a long term bear move, but one that might last several weeks, maybe a month or two. And that doesn't even really start until we start closing below 58.09, or let's call it 58.10, round number, rounder number. And then I'd be looking for a move down to approximately 54.50. We'll see what happens. So I would be very careful about initiating new positions, either long or short, because of the likelihood of a very large, swift move. And I'm not sure which way, but I'm pretty sure it's going to be a big one. So you should be able to take advantage of either bullish or bearish. Next chart, and it's not going to show us too much on the 1 minute charts this morning. So going to the spider, which is closed today, and going to the Qs closed, and going to the NASDAQ, which is up a little bit and has made almost complete new highs for the whole trend, but it is also close to being overbought. Now, remember, my overbought 75, not Wells Wilder's original 70. So when I get over 75, I claim it's overbought, not until then. So we're getting close to overbought and we're getting close to those old highs. So I can allow a little more punch to the upside, but just a little, and then all of a sudden, kaboom on the downside. Or again, I can't tell yet, it'll punch through and have a very big move up. So the same strategy applies here. The downside breakout would be below 20,700, let's say. And the upside breakout we're close to. It doesn't mean it's going to happen. It could double top out and head south. Next chart, 1 minute, doesn't really show us too much today because of the holiday market. And we're back to the YM. We do have activity today, the 17th, and it's the doji inside day, and the 1 minute's not important. The Russell, big sideways trading range, but nowhere near previous highs. Nevertheless, breaking out of the trading range would probably cause a big move up or down because it's going sideways quite a bit. And I am talking about something like that, what happened on November 6th. And I'm talking about something that went on the downside December 17th. And you could even see the same thing happening again back here on August 1st for 1 or 3 days. And it's just classic. You go up, you go sideways, and then you have a breakout one way or the other that usually contains a big move. And the 1 minute, skip it. And the bonds. They are open, but we've got a doji down 7, not much movement, not telling me very much. But the big deal here is The head and shoulder bottom seems to be working fine. The sharp break that we had on February 12th was only a test of the neckline and popped right back up again Thursday and Friday of last week. Today doesn't count much because of the holiday. 10-year notes, same commentary, except no head and shoulder bottom. This little pattern here looked like it was doing okay until finally it broke way below the neckline on February 12th. So I had to erase the markings that indicate the shoulders and so on and the neckline. Now, crude is open. We've got the energies trading somewhat today. Came down, tested some support, a little bit higher on the day, but again, taking with a grain of salt because of the lack of volume in general and holiday quote unquote atmosphere in general. And we're looking at the heating oil, kind of the same thing, a little bit lower, but coming back up a little. We've got a little bit lower on natural gas, and natural gas did top out on Thursday and Friday. It got overbought, and now we're down. So I am giving this some credit, even though it's a holiday market, of doing what I was expecting it to do, holiday or no holiday, start to come down because of the overbought. And it did make a new high for the trend, but only by a couple of ticks, and then the closing price is well below the previous highs. Again, I keep mentioning that kind of thing is not good for a bull. And in overbought conditions, no less. Also, next chart is a bearish engulfing in the gold market on Thursday, and we're turning back down again. This morning, I don't have my strategies running, so you don't see red or green individual signal bars. These are all standard green-red candlesticks, but you can see that this is a bearish engulfing. And it was overbought. And my RSI doesn't care, so it did turn red, so I know if I run the strategy on the price action, it'll also turn red. All those bars that don't mean anything to me will be white, and you're going to see mostly yellows and the occasional signal, which is going to be a red or green, as you have seen in all of my 500 plus YouTubes in the last 2 years plus. Next, we've got silver. Big failure on Friday and slipping a little bit today, but holiday atmosphere. And we got platinum. Again, big failure. New highs, but didn't stay there on Friday. Closed very poorly, lower on the day, down. That was Thursday, sorry. And Friday, big down day. And we're getting a little follow through today. And we're going to go to high grade copper, bearish engulfing on the top of the market on Friday. Sell signal, flat out, red on my RSI indicator, as well as this one being red, and that was a bearish engulfing that worked out really well. This is red on the indicator, and that worked out really well. And I've got a green right here that did not work out very well, didn't go up hardly anything. So that was a small loss, I'm pretty sure. Okay, I'm looking for lower levels in copper. Bearish engulfing on Friday. Now, soybeans are not open today. Pass. Oil, pass. Meal, pass. Corn, pass. Wheat, pass. And cattle also closed, and hogs closed today. Chicago stuff. And we're going to go to that stock XYZ. It's a stock. It's not open today. The New York Stock Exchange is closed. Some indexes are active. We'll go back real quick to the E-mini and see what it's doing. Probably a lot of nothing. And we're now up a little bit less than a point, which would be 10, slipping very slightly. Obviously having trouble right in this price range. Highs last night, about the same. 3 o'clock in the morning, California time. A new high didn't go anywhere and got smacked down right away at 6:10 this morning, California time. And then it happened again a little bit, and it's happening right now, maybe. You guys have a great day and profitable trading to you. See you tomorrow.